The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and welcome to this regular Danielcode webinar. Delighted to have you with us. How's sound, Terry? Can you hear me all right? Up there in Canada, Mr. Deck, hello, mate. Everyone hear me all right? Yes, oh, good. He's okay. Well, that's good. He's up in England. That's probably all right for the rest of you. Hello, Pete, and also good morning to our friends in Australia. Good afternoon in New Zealand. All these time frames everywhere. It's totally confusing, but never mind. Hello, Chase. Nice to have you with us. A great crowd today. My goodness, look at this. Alan Keen's with us. Alan Varian, my friend. Alan Varian, yes, he gave me great advice when we moved back to Australia from New Zealand. He said, and I said, it's a terrible bloody place to live on the Gold Coast. We had to come here. My children want to go to Bond University at the Gold Coast, and Alan's a Danielcode tutorial guy, long-time member, and he said, try Mudgery Bar, and I did, and Alan, we finished up buying a house next door to that in Talai. Very, very nice. Pete Andrews is with us. Good old Pete, goodness me, the first guy I ever taught at a Danielcode tutorial. Pete Andrews still with us, of course, today. Nice to hear from you, Pete. Everything you've foretold about the dairy industry in New Zealand's coming true. Wow, there's some dramas over there, I'll tell you. Bernard Stricker's with us. Gosh, we are honoured. Bernard, we don't see much of you these days. He's a very long time Danielcode member. Bernard's the king of GMAG. One of the kings. I've got another one with us too, and terrific. Yeah, look at Daryl Kaur. I just sent him. Daryl's over in Mossman. He's a South African guy now living in Mossman in Sydney, and done 2 tutorials. And I just sent him a text saying it was a wild night last night. Your Thursday's our Thursday night down under, of course. He said, thank goodness I stayed up. Got the moves up and down, smiling today, thanks to you. Yes, well done. Brian Baird's with us up in Wee Waa. But it's hot up there, Brian. Craig Eyes, Craig's down in Melbourne. He's a tutorial guy as well. David Webb, king of the black lines. Hang around, David. We've got a dramatic black line on the US dollar index last night. Wow, the power of the black line. You're the king of the black lines. Hank's with us. Harold over there in Redding, California. Harold's a gold bug, client of ours, long time. Nice to have you with us, John Gans. Lots of people. Janet Rivette. Hello, Janet. Yeah, I've got your email. Terry sent it to me this morning at 24 to 27 May. And more on that in a minute. Jerry Winter's with us. Goodness, our supporting broker. Jim Brown's the new client. John Barnes. John Barnes is up in, just sent me a post here. It's in Ontario, Canada. Great. Marcel Vian. Marcel's Canadian as well. My friend Marcel, I hope you're feeling well. Marilyn's here. Mike Mitzos, our gun trader, came to the LA tutorial in May last year, made 20 times the fee, made $150,000 in 5 months after he'd been to the Danielcode tutorial. Mr. Deck, yes, Pete Andrews. Oh, I can't go on all day. It's lovely to have you all with us, guys, all our old friends. I hate to miss you out. I'm not singling anyone out. Gosh, Terry Knight's with us too. Wow. William Rogers, yes, nice to have all of you with us. Got a big turn up today. A lot to talk to you about. First of all, thanks to Terry for our great banner. As you can see, we've got landmarks from all around the world, and we've got a wizard and a warlock. And boy, we've had some wizards and warlocks doing great things in the market. Some not so great for them, but of course, with the Danielcode, everything's great for us. If this stuff, you either know it or you don't know it. I often say to my children, they sometimes get nervous before university exams, and I say to them, there's nothing to be nervous about. There's only 2 situations. You're either trained or untrained. If you're properly trained, you know what you're doing. And you'll enjoy it. And this is the chance for you to demonstrate your ability to your tutors and lecturers. And trading's just like that. If you know what you're doing, it's absolutely fantastic. If you don't, well, you're dedicated to poverty like most of the world. Anyway, let us move on as we go. Lots and lots to talk about today. and a lot of charts to show you as well, because it's just been a wild week, and they don't come any wilder than today's trading, when the ECB, the European Central Bank under Mr. Draghi, who's an Italian bureaucrat, absolutely made a mess of things, as they do. Quick note, Janet, you and others who are coming, the 2016 US Summer Tutorial, 24th to 27th May in El Segundo, Los Angeles, which is about a 3 or 4 minute cab ride from this lovely place I'm showing you the picture of. This is Manhattan Beach. Quite extraordinary. I mean, this is a 15-minute shuttle ride from Los Angeles Airport, LAX. Honestly, you think you're anywhere else in the world. It's very beautiful. A lot of shops there, great shopping centres. Those of you who are coming, ladies, bring your credit cards, because the shopping is apparently fantastic. I'm not a shopper, but I've been into the some of these nice little shops down at Manhattan Beach, and the big shopping centre at Manhattan Beach, very flash, very fancy, very nice, and nice to walk through and enjoy it all. So that's 24 to 27 May. If you haven't already made up your mind, I urge you to do so. Shoot me an email if you're interested. I will get the new up-to-date syllabus done over the weekend, hopefully, and that'll be available to you shortly. Hello, Boyd Yarns with us from another Canadian. Yeah, great fellow, great friend of mine, Boyd, and a demon goldbug. So that's our next tutorial, folks, the only one in the States. So if you're in the Northern Hemisphere, it's more convenient for you. That's the one for you to come to. Shoot me an email, please, jneedham@thedanielcode.com. Okay, Frank sent me, Frank DB, who helps me with the fourth degree, sent me a couple of charts. I want to point out to you, we've talked about it before, but a lot of you are interested in gold, and I want to just refresh your memories over the amazing calls for the lows in gold that have been made in the fourth seal, and how we get that name. Price, or the vertical axis of charts, is called the fifth degree. Time, or the second axis of the chart's horizontal axis, is called the second degree. Volume is the third degree. We don't use that anymore because volume is now so unreliable. It's dispersed with dark pools and matching private trading and all sorts of things. And an angle is the fourth degree, and there's a special angle that has certain qualities that I teach you at tutorials, which forecast future turning points in markets in both time and price, and we call this the fourth seal. You can call it fourth degree if that suits you better. It's the same thing. And here's the first chart that Frank sent me. And what we wanted to demonstrate to you yet again, is just how accurate. This is a 6-day chart, which are one of the ones we use for our long-term forecasting. This is the Huey, which, for those of you who are not gold bugs, is the unhedged gold index. It's an index of 25 gold miners who don't price hedge their future production with futures contracts or other hedging instruments. And it's a very, very good proxy for gold. And we forecast that there would be a very, very important low in gold. And we did that as early as September. And this is the chart you're looking at now. And you can see how incredibly precise these markets are when you're using the Danielcode numbers. And you can see the little coloured lines, the 59, the 62, the 44. Those are Danielcode time cycles. So in September, we had the black line. David Webb's the king of the black lines. He knows just how powerful they are. And we had this Huey index go back and touch the black line. That was also a 59 and a 62 Danielcode time cycle. That led to the big rally up for a month or so. And then it came down and gave us another retest, finalizing itself in January, early February 2016, where it hit the 4.445 extension. That's a Danielcode ratio. Gave us a false break of the original low, the September low in Huey, and fast moves come from false breaks, as I've told you many times, and off it went. And as Frank's noted on this chart, a 6-week monster 80% rally nobody saw coming. Extreme DC precision in both time and price. Well, nobody saw it coming except the Danielcode. We forecast this, and those of you who subscribed to the fourth seal saw this months before it happened, and profited accordingly. Who can't hear? Alan cannot hear. Sorry, everyone else can. Alan, you've obviously got a hotel. Janet, the hotel, I'm going to write to you anyway, but this is for the El Segundo tutorial. It's the Hilton Garden Inn at El Segundo. We've just got the link for bookings of that, which I'll be posting at the website as early, maybe as Monday, Janet, but I'll email it to you anyway. And I'll send that to you. It's going to be great to see you. Okay, the next chart that Frank sent is, this is the gold chart. This is also the 6-day chart. And some of the gold pundits who don't get the fourth seal aren't aware just how accurate this forecast was. We had a fourth seal line. We had time and price. We had Danielcode price. It hit that exactly. This is in January. We had a 59 time cycle and a 62 time cycle. Two of the dominant Danielcode time cycles, both expiring together exactly on that bar. And then it's run all the way up into, at present, it's at a 59 time cycle and another Danielcode number. And that's causing a bit of resistance at the moment. But that's how accurate this stuff is. And those of you gold bugs who don't subscribe to the fourth seal, you're missing out on something, because with the fourth seal, we forecast these terms both in time and in price, weeks and in fact months before these turns take place. It's quite extraordinary. I want to turn now to one of our wizards, Jamie Dimon, JP Morgan, one of the biggest investment banks in the world, dominated the newspapers because he bought $25 million of his bank stock on this day, 12th of February, 2016, which turned out to be the low in the S&P, at least an intermediate low, and we've had this big rally now for the best part of a month from that low. So that was very important, and I'm going to tell you what JP Morgan said about why that was so, and give you an idea what these people do. Now, let me backtrack so you know what I'm talking about. This is Barclays. This is not the bank. This is Barclays hedge funds. They track all of the hedge funds. And as you can see for 2015, these are the numbers that the hedge funds produced. And it came to the grand total of somewhere around 4%, with the very best of them returning 20-odd% and becoming, 15 minutes of fame for that result. And for the benefit of having your money in a hedge fund, where they trade mainly stock, but also a lot of over-the-counter securities. 2015, the hedge fund topped the hedge fund returns, as reported by Barclays Hedge, about 4.2% for the year, for which you'll have the pleasure of paying 2% of your capital every year and 20% of the profits. Now, this hedge fund stuff is entirely different to what we do. To me, it's just slow and boring, but it is passive management. And for people who don't know how to trade, my guess is they have to be happy with that. It's better than bank interest. But let me take you through what JP Morgan said about this rally. And these are comments from their head quant, a guy called Kalanovic, who's apparently a very clever fellow. He's described as the head quant of JP Morgan, so I guess he's a high flyer and probably on 20 million a year or so, maybe more, maybe a lot more, how would I know? And this is how he's explained this turn. And he's saying short-term equity momentum 1 month turned positive around the 1930 level. Okay, let me put that in perspective. This is the 1930 level way up here. Okay, way up here. Turned positive around the 1930 level, and 6-month momentum turned positive a few days ago. This was last week. This would have resulted in CTAs covering most of their short equity exposure and inflows in 50 to 70 billion, confirmed by the equity beta of CTA benchmarks. The market moving higher also changed the index option gamma imbalance and resulted in daily hedging flow that suppressed realized volatility. Lower realized volatility in turn led to some, albeit smaller, equity inflows into volatility targeting strategies, about 10 billion, and risk parity strategies between around 10 to 20 billion. All in all, over the past 2 weeks, equity inflows from systematic strategies totaled around 80 to 100 billion, taking into account the low liquidity S&P future market depth, and assuming this total equity market depth is around 4 times that of futures, including stocks, ETFs and options, we estimate that more than half of the market rally in the second half of February was driven by these systematic inflows. Now, if that hasn't bored you to death, I don't know what will. And I got another 2 pages of it here, but having read it out loud, it's just more of the same. And it actually has very, very little relevance to trading. This is very slow analytical stuff. I don't know why you have to be a quant if you're worrying about the 1930 level. That's up here. We're interested in this level here. And this is, there might be the Dimon low. More importantly, it's the Danielcode low. 1802 was that low. We had a blue line buy signal. This is the S&P. This is the E-minis contract, futures contract. I'll show you more of that. You can see we had blue line target recognition, fast stochastic oversold, stochastic oversold, and divergence on the CCI momentum indicator. Okay, let me move on, see if this is going to do it for us. And I'm now going to show you a bit more detail of these lows because this has turned out to be a very important low. This is the S&P E-mini. There's our blue line buy signal. It was a TO3 and a blue line buy signal, so I guess all of you got it. I hope you did. And you can see that what was important is that we had a blue line at 1802, and the low of the setup bar here is 1802.50, absolute precision. And that's what sets up these blue line and TO3 signals. None of these, as you can see, we use very old, very uncomplicated and unsophisticated indicators, which most of the world long ago discarded. They're just stochastics and a momentum indicator. It's all regarded as about equivalent to the T model 4 these days by the quants. But what the quants are all missing are the Danielcode numbers. And markets turn at these Danielcode numbers all the time with amazing and absolute precision. And if you don't have these Danielcode numbers, in my view, you're no hope. Here's Germany's DAX, also at this universal low. Pretty interesting that for this low we had buy signals in the NASDAQ, the Russell, the S&P, the Dow, and also the DAX. They're all correlated. And this was one of those universal turns that just set these equities off roaring. At the same time and on the same day, we had the buy in oil to tell us we had an interim low in oil. And in the boring part of JP Morgan's analysis, which I didn't bother reading to you because it was boring enough just for me to hear it, he's talking about the turn in oil rather, boosting market sentiment. And he's talking about it being up here somewhere. Which is meaningless. What we're interested in is getting the turns. And here's our blue line signal. We had a blue line there at 28.87. The close of this bar, remember, for Danielcode target recognition, either the bar high-low or the close is valid. In this case, we had a close at 28.83 against the blue line at 28.87. Very, very accurate. 4 ticks. It's a hair. And then we had all of the other requirements for a blue line signal. and that gave us our buy in oil, which was the other part of the equation that JP Morgan talked about. As well as that, we had this sell signal in T-bonds right at the high. Now, this is actually the all-time high of US T-bonds, and you can see we had a Danielcode blue line at 170, 170 little arrow 30. That arrow is called a carat. C-A-R-A-T is the correct expression for it. And T-bonds, just to confuse everyone and make it different, this is actually the old way of writing prices. You'll see this in the grains. All of the CBOT markets use this nomenclature. And if it's confusing to you, well, it is confusing. And it's sort of like a secret language for that only brokers knew back in the day. This has the number after the carat, I think it's carat, is the tick value. So this was only 4 ticks away, and this works in 30 seconds. There are 32 carats in a point in T-bonds. So you can see how accurate this was. The setup bar gave you target recognition, all the other things in place. So we also had a blue line sell for that, all on the same day. We had oil turn up, T-bonds turn down, all the equities turn up. Massive trading. So that shows you a little bit about the wizards. Now, let's move on to the Warlocks. Today's European Central Bank debacle. Put you in the picture. This is Mr. Draghi, who's an Italian banker, for some years now been the governor of the European Central Bank. And his aim has been to weaken the euro. That's his intention. And he came up with his initial part of his speech talked about more QE. They're already into the negative QE nonsense. More QE, lower interest rates, and more bond purchases to weaken the euro. And as you can see, this chart's euro-US. You can see that this market started off by diving down. Look what happens. It goes straight to the Danielcode blue line. And that's about the time Mr. Draghi said, and we're not going to have any further change to interest rates for the foreseeable future. That reversed sentiment, and the market took off like a mad dog. In fact, as you can see, this is the largest positive reversal of an intraday decline of at least 1% in the history of the euro. I mean, this is just the most massive bar and the most sensational trading. But this came out during Wednesday's trading sessions, and of course, I should say Thursday's trading session, Friday morning where I am down under. But we had these signals posted on Tuesday and on Wednesday, at least 18 hours before Mr. Draghi said what he was going to say. And of course, all the sentiment was pretty well, always this stuff's leaked, that he was working to weaken the euro. So pretty well the whole world was trying to get short the euro. I think I want to show you all the buy signals we had on euros. Here's a daily buy signal in this market. Those of you who don't get the TO3 plus signals, you should. Here's the euro Aussie dollar. That was a blue line and a TO3 buy. For that, here's the Euro G British pound. That was a daily buy signal. And look where it turns. It bounces straight off this Danielcode retracement, almost exactly. Now, remember, folks, this is supposedly panic stuff. This is supposedly, Draghi making he did certainly make an idiot of himself. He's done exactly the opposite of what it was intention to do, which was weaken the euro. But this is whole-scale panic. These are this massive, great big bars and the speed of these moves. This happens only when traders are wrong and they're caught wrong and they're desperately covering and their stops are getting hit. But we knew this a day and a half before this even happened, and it was the complete opposite of consensus. Consensus was Draghi's going to talk about additional bond purchases, more QE, lowering the interest rate to weaken the euro. Yet we had buy signals on every one of the euro pairs. So, I mean, you talk about wonders. This is a wonder. How do we know? Well, I don't know. It's the Danielcode that knows, and we know because we have a mechanical trading system that doesn't allow us to have any opinion. We know what the signals are telling us, and we know where the support and resistance numbers are, and we post those signals for you accordingly. And for those of you who want to come to the tutorial in May, I actually teach you to do all of this stuff for yourselves, so that you're independent of me and you can go on with this sort of trading for the rest of your lives. So I do hope some of you that I haven't heard from yet will be coming to El Segundo in May. Here's the CAD Chief. This was a sell signal today, blue line sell signal. I'm just trying to make the point here. The bar before, this is Wednesday's bar, that is the bar that gave us DC target recognition. So Danielcode target recognition can come at the bar, high, low, or the close. The close on Wednesday in CAD Chief. Let me just open the other file here so I can tell you. That close was 7523 against the Danielcode blue line 7527, 4 ticks away. Absolutely fantastic. And that's what set up the trade for the blue line sell. Okay, so it kept rallying up and hit these Danielcode blue lines and did a quick snapback reversal. Very dynamic. Here's today's silver trade that I just wanted to show you because remember that silver and gold are correlated, and today we had a daily buy signal in silver. Now, how we use this market correlation, silver and gold are correlated. A whole lot of the Forex markets are correlated with each other. In other words, if you have a big move in the euro, it'll affect the euro Aussie, the euro yen, the euro GBP. Any one of those pairs that have the euro in it, they're all correlated to a high degree. And as are the US equity indices and Germany's DAX. The other markets that are correlated to each other are silver and gold. Now, they don't always move together, but they do move in the same direction a very, very high percentage of the time. So they are correlated to the extent that if you have a Danielcode signal in one, you can execute it in the other. So silver's got a rather large margin, and I know most of you are gold traders. Keep looking for these signals, because if you get a signal in silver, you can execute it in gold so long as the trade is elected, which means that it has to go to the number we require to get it filled in. So let's look at that. I wanted to show you this chart. All of you Danielcode tutorial folks, just bear with me for a second while I tidy up my pages a bit here. Excuse me. You Danielcode tutorial folks, have a look at this. This is Euro JPY, and at the low, let's find this chart here, Euro JPY. At this low, which was March the 1st, if you're looking at this, you had a Danielcode time signal to buy. Okay, any of you who've done a tutorial recently should know how to trade the Danielcode time signal. So that was a buy. 3 days later, on the March the 4th, you had a Danielcode time signal to sell. Which was not elected the next day. It was an inside bar, but it was elected the day after. And down it went. And then the dominant trend, of course, was up. You'd have known that if you've been following what I taught you. You had to get back to be with the dominant trend. And as well as that, on Wednesday, March the 9th, we had a DC time signal to buy, which gave you this massive big bar up in today's trading. And I didn't put that into, that doesn't go into the website. The time signals are just for tutorial people. I teach you that at the tutorial. And that little easy trade there is worth almost $1,400 per one contract in futures. So those of you who've learned how to trade Danielcode time signals, you should have got all of that. If you haven't, think about it and let me know so we can work to get you up to speed on that. Down here for David Webb, the power of the Danielcode black line, just to show you folks that things don't always go to plan, but that there is always rationality and logic in what markets do if you have the Danielcode numbers. We had a buy signal for the DX. This is the US dollar index. Excuse me. We had a buy signal on Wednesday, which was elected. That's going to be this bar right here. And we didn't get a first profitable close, so we stayed in that trade. And today, this market, look what happened. It took off like a mad bull. This is a huge move. It hit the Danielcode black line like it was shot. It turned around, reversed, and it's the biggest bar you'll see on the DX chart for a very long time. And that was all the emotion involved with the European Central Bank and Draghi starting off by saying what he intended to say and then dropping his foot right in it because it was the emotion that took over. The idea was to weaken the euro against the dollar, and which it certainly did. The dollar strengthened here in the early parts of trading today, which is what you would expect. That was the consensus. That was the leaked version of what Draghi was going to talk about. And then right at the Danielcode black line, 98.410 on the futures contract. I think, let me see what that number was. That high, 98.410, that high was 98.43. 2 ticks away. He reversed all sentiment by saying, presumably, this was the reason for it all, there'll be no more reductions in interest rates. We think they're pretty right for a while. But the wonder of this, what you got to keep thinking about when you see these charts that I keep showing you, how is it that this always happens at the Danielcode numbers? Why is it that this has been on your members charts now for 1, 2, 3, 4? In fact, it's no longer a valid black line, but it was at the time, and it's been there for days and days. Why is it that these amazing, supposedly random events happen always at these Danielcode numbers? How is it that the Danielcode's creating buy signals in the euro pairs on the very day where the European Central Bank Commissioner is going to say that he's introducing further measures to weaken the euro? But the Danielcode comes out with buys in Euro, Aussie dollar, blue line and TO3, Euro GBP daily buy, Euro USD daily buy. Excuse me, how is that at all possible? And I want to show you the chart. That these things are not random events. We have these signals posted before these events happen. In fact, 14, 18 hours before it happens. And you now see that these turns come exactly at the Danielcode lines, which is quite extraordinary. And that's really one of the wonders of trading. One of the wonders of trading. So this was David Webb, you and the black line. So we were long. On Wednesday, we were still long on Thursday, and we saw this massive roar up into the black line. If you were watching your charts at some stage up here, you would have tightened your stops and finished up with a nice profit. If you were off at work and not watching your charts, we got stopped out underneath here, and that became a losing trade. Or for those of you who've done tutorials, you know that when you get an outside bar, it's always a stop and reverse. And you would have been short underneath here. But I want to show you that I've been showing you a whole lot of wonderful winning trades. We also do have losing trades, and if you were just putting on your orders and going off to work, which I know a lot of you do, you wouldn't have seen all of this great drama happen overnight. So that's the main stuff I want to show you on the charts, folks. And you're most welcome to have a free trial of anything at the Danielcode. If you're interested, you simply hit the register button at the Danielcode website, which is www.thedanielcode.com. Register a username and password. Email the username to Terry at support@thedanielcode.com, and he will switch you on for a 31-day free trial of everything at the Daniel Code, so you can see what we do and see what of that stuff works for you. And we don't do any marketing or sales. You're not going to get a phone call from anyone or an email or anything else. We simply say take a free trial if it suits you. You can subscribe, and that way you make up your own mind after a bit of time as to what we do is suitable for you. Here's our compliance statement, folks, that I show you every time we have a webinar. And I want you to be aware that there is risk involved in trading futures and Forex. And if you don't know how to trade the Daniel Code way, there's a whole lot more risk for you. In fact, 90% plus of traders lose their bank in the first 30 days. The literature will tell you the first 90 days. My experience is they lose it in the first 30 days. So, goodness sakes, take your time, learn how to trade properly with the Daniel Code, practice on a sim account. Do not risk real money until you're sure you can match the results that you should be getting. And that is the end of our slideshow for today. Terry, thank you for that wonderful Warlocks, Wizards, and Wonders indeed. We saw them all. Excuse me. So here's a more detail. The chart hasn't changed for you yet. It should have now. Here's a more detailed look at this S&P trade here that we're talking about. This is the Daniel Code Jamie Dimon low. And apart from all of that nonsense that you heard from JPM, which is terribly complex, it means absolutely nothing. That's all hindsight. The reality is what made this market turn. And why has it been such a great rally? Well, what made it turn is the Daniel Code numbers and the Daniel Code tools set this up and signaled this as a prime blue line trade and a TO3 trade, and off it went. And we've looked at a whole lot of other markets that turned at the same time, including T-bonds and oil. As far as where it'll go, we don't know that. We don't have the gift of foresight. And the Daniel Code is completely silent on quantum. And you can see we had, another TO3 signal here, which gave us a nice rally, but then it came back to retest. And that's because it was waiting on time. That's why it had to make this low here. But look what it has done. In fact, it's just run straight up to the next Daniel Code blue line numbers. And it's got itself stalled around this 2,475 line. You can see here on March the 4th, last week, Friday, it just punched through and ran away. Here's the next day, Monday, 2004.5, one tick away from the blue line. That's the market's way of saying, I know where these numbers are, and I respect them, and it's telling us that it knows where the numbers are, and it's tracking the Daniel Code numbers. Now, that doesn't mean any more than that. It doesn't mean it's going to turn there. It may well go on to other numbers, but if you follow the sequencing of the Daniel Code signals that come out and the rules that come out from there, you will be on the right side of these markets practically all the time. And last night, when I set this webinar and wanted to talk about Wizards and Wonders, I was actually having a bit of a laugh about the great investment banker's advice, which came well after this important turn in equities. But then, of course, Mr. Draghi just gave it all to us to contemplate last night. And at the risk of repeating myself, you should really consider how the Daniel Code could have had buy signals on every European pair when the stated intention of the European Central Bank was to weaken the euro against all of the major currencies. And how is it we not only had those, but we posted those signals 2 hours after the close on Wednesday. In other words, 18 hours at least before Mr. Draghi took the stage. And as we've seen with the charts today, certainly the markets initially did exactly what he was hoping they did. You saw the euro weaken against all of the pairs, But then his final statement, presumably it's his final statement, I don't think it was. I think it's the Danielcode buy signals and the fact that the market's got to that convergence of time and price, where, as we say, when markets find a Danielcode time and Danielcode price, a turn is almost inevitable. And we certainly saw that last night in the most dramatic way, absolutely extraordinary. That's what I wanted to talk to you about, folks. Let me have any questions if you would. I didn't want to belabor too much today. I think I've managed to get across all of the main points I had for you. So do shoot me some questions and we'll see if we can deal with them. Albert, yes, Albert Aberani. Is this only on Trade Navigator? I use Trade Navigator, Albert. You don't have to use Trade Navigator. If you'd like to, Terry at support can organise a free trial for you. But these numbers are created inside our website, and you can take these numbers, let me show you, and you can put them onto any charting package that you're interested in. Let me just bring up the Danielcode website for you. This is it here. Your screen should be changing in a few moments so you can see it. While we're here, this is the banner for the Danielcode free trial. If you go ahead and click on that, you'll be able to set up your free trial, and Terry can set up a free trial of Trade Navigator for you. But let's have a look at the charts. Once you become a member, all of these additional headings that you can see will open up here, including members charts. So we can go in here to our chart navigator and we can have a look at the various charts there that I create twice a week and post for you. Now, these are not live charts. Okay, these charts are updated on the weekend and on Wednesday night. So they're created by me and they're all hand done and they're posted by Terry. But you don't get, for example, you'll see Thursday's bar is not on here. This is Wednesday's bar, the last time they were updated. And you had these numbers here on the members charts, which is where the euro went to before it reversed and roared higher. In the same way, you can see here's the other CAD chief, here's the other euro JPY chart. Same thing happened here. In fact, this is the one I was talking about. That you could have bought this. You could have bought Wednesday's high purely on it being a correlation from the euro USD buy and the euro Aussie buy. But if you've done a Danielcode tutorial, you would know that this bar here sets you up a buy signal on a time. Danielcode time signals. Time signals are not part of the website. We don't post time signals for you on the website. That's something I teach you at tutorials. And once you've done a Danielcode tutorial, you'll be able to trade these markets simply off time signals, in addition to everything else that I teach you in those 3-day sessions. But the Danielcode time signals are quite extraordinary. They take a bit to get your head around, which is why we hammer them and hammer them and hammer them every day of the tutorials. Once you've got them, they're quite marvelous. This was a buy. This bar setup here gave you a sell signal, not elected on the inside bar, elected down here. Next bar told you, look where it turned, right at the Danielcode number. And this was another Danielcode buy signal based on time signals. And what these are our major time signals, but we reduce them so that you can trade them off daily bars. And they're quite extraordinary. When you match those up with some of the other fourth seal type techniques I teach you, moonbeams, fourth seal and fifth seal lines on daily charts, the accuracy is quite extraordinary. So there we are, Alan. You don't need to have a Trade Navigator, but you're very welcome to have a free trial. But you can just take these numbers and put them straight onto any charting system. Let me go back here. I've got a question from Jim Brown, who I know is a new member. John, can you go back over the black line from today on gold? Also, a quick demo of recreating the retracements. Also, do you just send the blue line numbers and we put them on? Okay, let's deal with that one-on-one. Can we go over the black line from today on gold? Let me see if I've got that chart on this computer. There is no black line trade on gold today, Jim, but I can show you what is there, and I will. And at the same time as doing that, I'll show you a demonstration of recreating the retracements. Certainly we can do that now. Do you just send the blue line numbers and we put them on? Well, for 20 of these markets, Jim, they're in the members charts. Okay, so you can see here, let's go to this drop down. Here's our Forex pairs. You can see that you actually have charts for Aussie USD, Canadian Chief. CHF is the code used for the Swiss franc. I don't know why they call it the Chief, but they do, probably because it's CHF, or the Swissy, most people call it. Euro, Japanese yen, Euro, US dollar, British pound, Japanese yen, British pound, US dollar, New Zealand USD, USD Canadian. CAD is the Canadian dollar, called the loonie for some reason, and USD dollar, Japanese yen. Those are the Forex pairs that we post charts for. Here are the charts for the DX, the US dollar index, and these are the equities charts. We do the DAX, the Russell, and the S&P. For the metals, we do copper, gold, and silver. And under miscellaneous, we do crude oil, soybeans, sugar, and T-bonds. So for all of those, you'll see on the charts that they have the numbers on them, which you just copy off here and put on your own charts, Jim. For the other markets that don't have charts with them, I create the blue line orders for you, and they appear under here. These are the TO3 signals that a lot of you subscribe to. They're just the TO3s. In here are the TO3 plus signals, which include the daily signals and the blue line signals. And once you've seen those, you can then go to this link here, which says Trade Program, and you put in here the amount of your account, whatever it is. Might be 5,000, 10,000, 50,000, anything you like. You put in the percentage that you're prepared to risk on each individual trade, and then you click this button, Calculate Contracts at Defined Risk. This will all swirl around in our website up in Denver, and it'll bring out the trades for today, and it'll tell you what the trades are, what the market codes. This is CL2, this is oil. Tells you there's a sell signal for today, and it tells you the point at which you would enter. 36.22 is the point at which this trade is elected. Now, do bear in mind that about 40% of these Danielcode signals are never elected. But by elected, they have to go to this number to become valid signals. Until they get to that number, they're just a conditional signal, and it tells you where to put your entry, where to put your stop. It tells you what your exit protocol is. This is usually a 3 or an R, and it tells you, most importantly, whether these trades are correlated. So you can see Aussie JPY and Aussie US dollar are obviously correlated. They both got the Aussie dollar in there, and this program knows which markets are correlated, and it adjusts accordingly for how many contracts you should have. So it's saying you should have 2 of those and 3 of these. Let's go and find a futures contract as well. One of those, you just type in the number you think you want and click this button, Calculate Total Value Sold. This all spins around. It comes back. It'll now tell you what the dollar risk is. So if you enter at this number and you have your stop loss at this number, your initial risk on entry for this market is $452. These are in mini contracts, 378 in the Aussie USD. And down here it tells you if you want to trade soybeans, the margin is around 2,200. Now, these margins change, so always check with your broker or go to Gain Capital, Gain Capital. They have a very good margin table there. Ours are not always up to date, but they're there just simply to give you an indication of what the margin is. And were you to take that trade, it's telling you you would have an initial exposure of $487.50 if you entered at the number that says entry and had your stop where it says stop. Okay, so let us go and have a look at gold for Jim. Let's bring up a gold chart, and we can do that. So here we start. Here's GC3, the 057. This is the continuous contract. If you put your cursor in here, just look up at this top left-hand point here, Jim. You'll see that this chart is 2016-04. That's telling us that the current front month of the futures contract is April. So we have to go to the April contract, which is here. And while we're back on the 057 contract, you'll notice we have these little notes as R for rollover in a triangle. That tells you when the rollovers have happened and when they're estimated to happen. So this market is going to roll out of the April contract on or about March the 30th. And you want to be out of the contract a couple of days before rollover. So here's gold. There's no black line trade in gold. I will show you what we did have, in fact. Here's the gold chart. And the chart is on the other contract, but I'll show you here. This is the tool you use, Jim. This is a little hedgehog down here called Dan. He's our mascot. You use this tool. This is part of the Danielcode suite of tools. You get these when you become a member of the Danielcode. They're free. And you use this as your retracement tool. You simply take it from the high to the low. This is the latest low here. This is, in fact, the swing low. Or the operating low. We take off, excuse me, Chase in particular. It's slow today, computer's overloaded. You take off the ones that are not relevant. That one's gone, that one's gone. And you can see that this market, in fact, retraced to the 50% retracement, which is 1236.1. The low of this bar is 1237.5, about 6 ticks away, very close. When you have a further look at this, you'll see that there are a number of swings in here. That's one swing to there, Jim. That's the operating swing. That's what we're concerned with now. But there's another swing to this low. Another swing to this low, which is the penultimate low or the low before the final low, and this was the major low. So that's how we use our retracement tool. In the same way, if we want to know where this market's going to go to, we would have our black line, our blue lines up here, which I'll show you in a moment. But before it gets there, it has to retrace this swing that it's in now, which is from that low to this high. And you can see it's just failed to get to the black line. Let me just take away those extra ones. This is what you do. You just take these off. And you'll get a pretty clear picture of what this market's doing. Now, remember that when I put these retracements on, they're valid at the time. But if this market is to go one tick above the old high, then of course, this retracement here is no longer valid because it runs from this high down to this low. This is the operating swing from this high to this low here. Okay, so once the market goes above that, you have to put new retracements on. Okay, so that's that. We put the blue line numbers on the chart. Let's have a look what we've got for gold while we're talking about it. Let's go to our charts here. metals. We want this lot here. We want to look at gold. Here's the chart from Wednesday. You can see this market ran up to the blue line at 1280.5. It's bounced off this retracement. We used a different retracement. I'll show you that. And now it's back up near the 89% mark. Let's look at that chart we're at. Here's a different retracement. Same tool. The next retracement down is this low here. See, there's a little low there. This market went down, has a higher bar either side. That makes it a low. And these numbers here are also valid. If it goes down further, it will move through. What these markets do is they track from one set of numbers to another. I might be able to show you that more clearly on this chart here. Jim, this is this happens to be the Australian dollar, US dollar cross in Forex, and it has a whole lot of numbers on it which might be confusing to you. In fact, they're just retracements of the various swings. We can see that we have, here's the high. This is a 6-day chart. Every one of these bars is made up of 6 trading days. Here's the high at $1.10.8 US cents. Absolutely crazy. There it was. But there's one swing down to that low, another swing, this is an important low, another swing to this low, and another swing down to this low. And in fact, there are numbers further down, but they're the dominant swings. And look what this market does as it comes off. It stops at this number. Okay, this is a different, slightly different swing where these numbers are. Let me move these so they're a little bit clearer for you. You can move these charts around, go to your dates axis. Bear with me while the program opens. We can change this from 30 days to 45, which will move it all over for us. Now you can see these numbers. It came down, it bounced off this number. That's this first sequence here. Rallied back up, came down, hit the next number. This is a different sequence. This is 95.70. It's a different retracement. Down it went. Gave you target recognition on the close on the 89.29 sequence. Then went down and turned at the 88.17. Rallied up. Comes down. Now it goes to the 8664. In other words, it's switching between these sequences, but it's following these sequences all the way. This one here bounced a bit early, showing the strength in it. Down it went, and I'm looking for 67.79. It just didn't get there. Put in a low 68.27. Should have gone a bit lower and probably still will. And now you've got a rally. So this is a rally in a bear market. 74.94 was the old support, and old support now becomes resistance. Okay, so that shows you a bit of an idea of how these things work. So Jim, I hope that helps you with that. Okay, Alan, I've answered your question. Chris, hello Chris. How does the SP500 look in your long-term DC trend chart given the shot across the bow decline in February? Yeah, we've got that. We want to go to our 6-day chart. Here, let's have a look at the S&P. For this particular study, I use the S&P index, and as you can see, this has been controlled since the low March 2009. It's run up this Danielcode trading channel, these blue lines, the Danielcode trading channel, pretty much perfectly. In here we got our first close outside 1 standard deviation from the mean, rally back up to the mean. That's what markets try and do. And right here, not there too long, this is the 6 days ending February the 10th. We had our first close outside 2 standard deviations from the mean. That is a pretty powerful signal that the uptrend has ended. So technically at that point of view, we have our second signal that we've entered a bear market. And there are basically 2 options open to this market. If to maintain the bear market scenario, Chris, it can have a big, long sideways consolidation. That's one option. or we can have a really serious run down to much, much lower levels. And we don't know that until it happens, but we'll know it before it happens from our Daniel code signals in the fourth seal. And you can see this market already. It's observing these Daniel code numbers. 18, 18, 85 was the retracement. This low's 18, 12, 29. This one broke it, a little false break and ran away. False breaks give fast moves. That's why you've had this big rally. So what it's trying to do now is, first of all, it will try and regain this one standard deviation from the mean that's around 2033. Then it will try to regain this median, which is now up. It moves, of course, but it's roughly at about 2183. They're the two most probable things that it will do. We don't have a really impressive crash cycle here. Back in June up here, we had our crash cycle 59 on the first hop, high to high. We don't really have that here. This is a very minor and unconvincing high, but we will see what happens as we move along. So the best option at the moment is that we have a long consolidation in here, but still bear in mind, Chris, that we are technically in a bear market, according to the Daniel code analysis. Oh yes, so that's where we are there. We're cautious, but we're taking the daily signals, Chris, and we're as happy to be long as we are short. With futures trading, we don't have any great secular bias. It's not like we're uninformed folks who buy stocks and believe in this buy and hold theory, which is just propaganda put out by brokers and share markets to get people who don't know what they're doing to invest in stocks. We grab the buy signals here, as I've been talking about today, at that Daniel code low 12th February, with both hands. We're as happy to be long as short. We follow whatever the Daniel code signals are, and we make money both ways. Remember, futures markets pay exactly the same going down as they do going up. The reason I like corrections is because they go down a lot faster than they go up, and you make it a whole lot quicker. So that's where we are with that. Norbert, the loonie is the loon. Oh, it's the bird, I guess, is on the $1 Canadian coin. Thank you very much, Norbert, and also Janet. Okay, there's Bernard. Here we are. Oh boy, cop this. This is from Bernard, who's a walking encyclopedia. CHF stands for Confederation Helvetica, or Swiss Confederation franc. Well, of course, Bernard, you are Swiss, so you would know this, wouldn't you? Thank you. Swiss Confederation franc is the proper name for it. Confederatio, haven't pronounced that right, Confederatio Helvetica, that's the Latin. That's from Bernard, who's a Swiss gentleman. Lives in Puerto Rico, goes swimming in the beautiful ocean every day. Wonderful guy, Bernard and Gabriel, great friends of ours. Been to a lot of tutorials. Bernard, time you came to another one, I'll teach you how to trade time signals on the Daniel code. Time you came to another one, pop over to LA to see us, mate, in May. Would be great to see you both. Jim, yes, how do you know the range as it's traded in a lot of markets? Day range, as it were. We know the range from the charts. Let's go and have a look at another market, perhaps, if that's not clear. We start off with whatever the operating range is. Jim, let me find another market here, might make it easier to see. This is dollar yen. So here's the most recent low. Here's the most recent high. This is the operating range. We take our Daniel code retracement tool. We run it from the low. We drag it up to the high. And that gives us all of the Daniel code price levels in that range. And we can take off the first one, which it ignored. And you can see that the second number in the Daniel code sequence was 11.14.997, and this market went up to 11.14.875, just a handful of ticks away, and then corrected. Let me show you another example, because they all do exactly the same thing. Let's have a look at a market that's got a bit more volatility in it. Here's oil. Here's the last low in oil. There's one high, two highs, three highs, four highs, five highs. Highs are swing high, means it had a lower bar either side. So the first place we'd put our retracement is up to here, and you can see the market from this low. It ran up to the 34.33, back down, broke 34.33. It's now gone through that swing, so we take that off and we move on to our next swing. We go from this low. Here is the next obvious high right here. Pull those across. Didn't react to that. Must be another swing involved. Let's go to the next high. It's slightly higher here. Doesn't mean much. Here's another high. There's a swing high there. Pull this across and bingo. Okay. After it ran through this first swing numbers, it switched to a different swing. This is the swing that runs from this low to this high. There's another one to this high here that hasn't got to yet. 38.59. You can see it got there, 38.51, and it gave you target recognition, said that's where I'm stalling for a while. Now, this target recognition at all of these numbers sets up trades for us, Jim, because it creates signals. Markets turn and only turn at the Danielcode numbers, and you can prove that proposition for yourself very easily. Go to the website, go to the home page, and you will see in here we have a link called Chart Archives, which comes alive for you as soon as you've subscribed or you're on a free trial. And if you click on that link, you will see about 32,000 charts are in here. Every chart that I've created since 2008. And Terry's organized them all by year. You can go through 32,000 charts and you can prove to yourself the proposition that all markets turn at the Danielcode and only at the Danielcode. Okay, Jim, that's it. Day range. Here's Pete Betard. Pete took us out in this boat when we were over at Waiheke Island. He took us out for a cruise around the Hauraki Gulf. Beautiful. Thanks. Had a wonderful weekend. Oh, he's gone boating with Phil. Okay, he's been working the last few weekends. That's his excuse. He's gone off fishing on Game On is the name of their nice cruiser. Okay, so that's it for today, folks. Thank you for being with us. Do send me an email if there's anything you'd like me to cover in particular at the next webinar. I'm glad you were all with us, hopefully, today. Today's trading, Thursday. You made a fortune if you follow the Danielcode, so you're probably all exhausted counting your money, but well done. It was, in fact, just wonderful trading and completely counterintuitive. Nobody in the world that I'm aware of was trying to buy the euro today, except us. And as I say, we had those signals posted 2 hours after the market closed on Wednesday. About 18 hours, has nothing to do with news. We knew it long before that. So thanks for being with us, folks, and I'll look forward to having the pleasure of your company at the next webinar that we did. So bye for now, and enjoy your weekend. And did I say Honest John is with us today? What an honor to have you, Jay. I hope I'm going to see you in El Segundo, mate. It's well past time that you and I caught up and had a bit of time together. All the best, and thanks for being with us, folks. Bye-bye for now. Bonsoir, Marcel. Bonsoir.